Well, welcome back to Accounting Introduction, and today, Lesson 8, the last of our 8 lessons, will cover Chapter 12, which is the cash flow statement. Cash flow statements include 3 different categories of cash flow, and we call this a classified cash flow statement when all 3 are represented separately. The first is cash flow in and out from operations. That would be revenues and expenses. The second category would be investment activities, which is purchasing long-term assets for use in production over each accounting cycle. And finally, financial transactions, which include changes in equity and in debt as the firm borrows money from the banks or public through bonds, or raises cash by issuing stock and selling an interest in the future profits of the company. The cash flow categories, again, operating activities, investing activities, and financing activities. The difference between inflows and outflows is presented as a net inflow or outflow for that category. There are 2 ways of dealing with the cash flow from operations. One is called the direct method, and the other is called the indirect method. And under the indirect method, again, we have 2 options for calculating. One would be the rule-based approach, and the other would be the reconciliation approach. In the case of investment and financing activities, there are no options. They're both presented directly in the textbook for you. So keep that in mind as we categorize cash flows. We're not looking at the type of account, we're looking at the nature of the activity. Is it an investment? Is it a finance? Or is it a operations-based cash flow? And that determines how we organize and classify our cash flow statement. Note that the cash flow statement is one of the 4 major financial statements that we accountants report annually, and it is generally placed at the end after the income statement, balance sheet, statement of stockholders' equity, and then cash flow. However, a sizable number of companies do present the cash flow statement in 3rd position, and a significant number, but fewer, will present the cash flow statement as the first. So when you look at your 10K filings, they may not be in the order indicated by the book. That is more traditional, but when you're dealing with analysis of the financial future of a company, cash flows are paramount and therefore will often be indicated or often be reported first before any of the other 3 reports. In preparing the operating activities, we can use, again, an indirect method or a direct method. And let's take a quick look at those. The direct method directly identifies the major sources and uses of cash. And you will see an exhibit on page 620, 12.1, showing you how we do the direct method of cash flows. And then on the same page, the next exhibit shows how one does this using the indirect method. And I'll leave you to examine those numbers and make sense of that in the text. Investing activities, briefly, include cash flows in from selling property, plant, equipment, or marketable securities, as well as collections from long-term credit instruments as notes or mortgages receivable. So in other words, if the firm has made investments, those interest payments are recorded as investing activity inflows. Cash outflows include purchases of property, plant, equipment, marketable securities, and long-term loans to borrowers. So there is the nature of your investing activities. Financing activities, the third of the three categories, deal with cash flows, including short and long-term borrowing, and stockholder equity as reported in the financing activities section of the cash flow statement. Cash flows include cash receipts, that would be money coming in from either borrowing or investing, and cash payments, outflows to repay debt, to purchase stock from the public, which then becomes treasury stock, and to pay dividends. Note the dividends are treated as an expense, but they are not an expense. They are part of the financing activity of the firm. The classification of each type of activity is what governs where it's placed in the classified report, and not the type of account, because you will get all types of accounts in all three of those. All right. Preparing the statement of cash flows is presented to you on page 623, and above that you'll see a little pie chart describing the placement of the cash flow statement within the financial report or 10K report as we studied last week, and the pie chart gives you a more visual approach to the breakdown there. So we have a number of options in reporting. Then we take a look at the indirect method of cash flow from operations on page 624 and following. And on page 626, we further differentiate this as either a reconciliation approach or as a rules-based approach. The advantage of the rules-based approach is it's simple because it follows a set of rules. But the similarity is great enough that you'll be able to make sense of these. That pretty much sums it up. The cash flow statement is terrifically important. It is fairly simple to produce, and there are examples here for you. Later on page 642, we have a breakdown of 1, 2, 3, 4, 5, 6 companies over a period of, I believe it's 5 years, yes, and showing their operating income versus cash flow from operations. And you can see how different types of companies operate and why the cash flow is significantly different from the operating income of a firm. Take a look at those. Those are real-world examples on page 642, including Alaska Air, Boeing, Johnson & Johnson, McAfee, McDonald's, and Pulte Homes Incorporated, one of the largest home construction firms in the country. Okay, there is a very limited vocabulary for you on page 646, consisting of 10 terms only, so take a close look at those. And congratulations. Once we have covered the exercises in class and taken the final exam, you will have completed this course, and it appears from your current progress that everyone in the class is going to receive a very good grade. Very pleased with your effort, and thank you for joining me in this initial course on accounting principles and practices, learning the language of business. Take care.